Good day to you wherever you are in the world, and thanks for joining me. My name's Anthony Beardsall. I'm the lead trainer at Excellence Assured Trading Academy, and today I'm going to be talking to you in an extended video about support and resistance and moving averages, exponential moving averages and normal moving averages. I'm going to be talking to you about how to fashion, how to develop a trading strategy using support and resistance and value within the average price of a market. Now, every market trades in exactly the same way. If you look at the charts, if you study them in detail, they all operate the same way. And in this particular video, I'm going to be giving you an example of how to trade using support and resistance. And it's focusing today on the opening of the German stock market, the DAX. So I'm going to show you, and we're going to move into some live trading in a minute. But first of all, I want to give you some sort of insight into how support and resistance works in markets, because you're going to see that the trades that I take are largely based on support or resistance holding, or support and resistance failing and breaking out in the other direction. So, you know, what happens when you've got a support and resistance level? What happens when the market comes up and hits it? Does it bounce down, or does it go through and bounce up? That's effectively what support and resistance does. You know, a support level, a horizontal support level will, you know, the price will hit it and it will poke through the other side. There you go. And then it'll come up. It doesn't hit it exactly and then bounce off. And it's what happens after it's gone through a little bit that's most important. Pay attention, let that happen, and then pay attention to what happens next. Does it come up and bounce up, or does it go through and bounce down? And they very often, those sort of movements, give good trading opportunities. Normally a support or resistance value broken and the market moves on swiftly. Normally a support and resistance level held and the market rebounds, and it rebounds swiftly, and that provides good trading opportunities. And it's what happens in the pause when the market comes down to this level. What happens in the pause, that action there, that's important. Will it bounce up or will it bounce down? And I'm going to go into that and show you some live examples of that in this video. So thanks for joining me. Any questions, do let me know. Ask the questions in the comments below, and give me a thumbs up if you're enjoying the video. I appreciate that. Subscribe to the channel for more of these type of videos and more of this type of instruction. I'm a professional trader and I do the tuition, I do the coaching out of enjoyment, and that's what life's about, isn't it? It's about earning a living, and it's about, most of all, having enjoyment. I enjoy this. I enjoy helping people. I enjoy other people's success. And if I can help you with your success, then I'm going to be delighted. So let's get straight into it. And I'm going to wander over now to the whiteboard to talk you through what I'm looking at and what type of trades you're going to be seeing in a minute. So the first thing that I want to show you is I want to show you the support and resistance levels within each candlestick bar and each time frame on a chart. So lots of different time frames, lots of different support and resistance levels. These are weak support and resistance levels, but they are support and resistance levels all the same. So each candlestick and each time frame will have a high, and they'll have a, spell it correctly, that'll be a good idea, and they have a low, a high and a low. Okay, and they will also have an open and a close. Okay, so a bar will open here and maybe go up, come down to the low, and then it'll go back up and it'll close here. So an open and a close there, and a high and a low there. And if the open is higher than the close, then it'll probably be filled in red on your charts. If the open is lower than the close, so if this is the close, that's the high, the low, and this is the open, then the candlestick will be coloured green. Okay, so each one of these levels is some kind of support and resistance. Okay, the next candlestick will probably react to one of those levels in some kind of way. Now, they're only important because if the market comes back and repeatedly hits one of these levels and rejects from it, then it becomes a validated support and resistance level. And so you'd watch out for that on the chart, that happening. The longer the time frame that this relates to, then the more powerful the support. So a low that's a low on the 1 minute, the 5 minute, the 30 minute, the 2 hours, the day, that is an important low. Just one low on its own for 5 minutes or 1 minute, that is then superseded by a lower low, that doesn't make much difference. But a low that is that represents the low of a longer time period is more important. Okay, so let's just have a look then at support and resistance. So they're within candlesticks, they're within line charts. Now a line chart only takes into consideration the open and the close. Okay, so the open and the close will leave a body of a candlestick with a high maybe and a low below it. Okay, and this level here, this close level here, this level here will be important, and probably more important than the high and the low, because that will show who had the most influence over that time period. Was it the buyers or the sellers? And if this is the open and that's the close, that would be red, and therefore the bears would have the greater influence over that particular time period. Okay, and it's where these levels are in relation to the average value of a stock or a market that is most important. Okay, in terms of the average price, you can be looking at moving averages or exponential moving averages, and I generally use the exponential moving averages because they move more quickly in relation to the most recent time frames. Okay, so if for example the moving averages are all down here and your candlesticks up here, and there's a big gap between the average and the body of the candlestick at the close, then this gap is likely to be filled at some point in time in the future. At some point in time in the future, the market is likely to come down to the average, and it's what happens at the average that's important, because the average acts like support and resistance. Okay, so just to remind you what that's all about again, let's say we've got, when the market's going up, the averages will go up. When the markets go down, the average will be going down. Now, an average price in a rising market is a good place normally to go long, and an average price in a falling market is also a good entry point, but an entry point short normally. Now, I like to wait for the market to confirm that it's staying on one side of the average or another, and these averages act like rising and descending support and resistance levels. Okay, so in this case the market will be going up, it'll hit the average, it'll go through the average, it'll pull back down to the average, and it's what happens next that is most important. Does it bounce or does it go through? Now, most regularly I like to see it go through, pull back, and that there is confirmation that the level is holding, or the average is holding, and it's value for the buyers, and therefore you'd be looking to go long here, there. Okay, in reverse, market comes down, hits the average, goes through, comes back, doesn't penetrate the average too much, or it might do, go through, and then it stays below the average and then goes down. And it's this level here and here that's important, and they're the levels to go short. So this is support and resistance breaking, this is support and resistance breaking. Largely this is resistance breaking, this is support breaking, but they operate in the same sort of way. They test, they come back, they break, they test, they come back, they maybe break again, but not hold. Now this is a hold. That means the close has, not only the price has gone through and you've got a high through there, but you've got a close of a candlestick bar or a price above the moving average. It then comes back down and you get it, the close above again, and so maybe that opens and closes above, but just gives you a low below, and you enter when the market when the candlestick goes green. You enter here when it's tested it, it's tested it, failed, and you enter when the candlestick goes red. Okay, I hope that that gives you some illustration as to the type of thing that we're going to be looking at. You get lots and lots of trades based on this type of price action, lots and lots of trades. Okay, they appear all day long, and they can be very, very quick and repeated trades early in the morning in the markets, in the European Open, the UK Open, and the US Open in the afternoons here in the UK as well. These patterns, they do repeat on stocks, in stocks as well, and it's all to do with the adrenaline and the emotion that's pumping through traders and through their bodies, and also what's happening in terms of, you know, do I think, if I'm looking at a chart, do I think it's going up or do I think it's going down? Well, that's the type of price action that you see convinces you one way or the other. You wait for a good point to enter, which is at value, which is at an average, and you take your trade in the direction of the trend. Okay, now the trend could be beginning, and therefore you've got the market, let's say, coming down, a reversal down here, and then you're looking to go up here to take the market up. Your stop is going to be below the most recent low. Now, if you've got an average that's going up like this, and you've got a market goes through, so you get a, let's say, a green or a blue bar going through, market's going up, it pulls back down, and then it starts going up again. The entry is here, and your stop, protective stop, can go below that price there, and the reason for that is because that is a support and resistance. The low of that bar is a support and resistance. That is a support level as well. The open of the bar is a support level. That's 2, and then you've got the average, which is protecting you as well. That's 3 levels of support, and they're protecting your trade. And if the market goes below that, you know that the play hasn't worked properly, and the market should go in your favor straight away. Hope that makes sense. Let's go and have a look now at some live action. This is quick. This is really quick action, and there are quite a few trades in here for you to look at. You can see what's happening in the charts. Sometimes I don't have time to explain exactly what's happening. Where I can, I do. And you can see just how effective noticing this pattern and noticing the support and resistance within these areas, and where, using the average for confluence within these trades can be highly effective. If you do something once and it's successful, that's great. If you do something 10 times in one day and it's successful 8 times, then you've got a good winning average, and that's what I'm after for you. Okay, so let's have a look at this price action and this commentary. All right, guys, so I'm going to use hotkeys this morning, and that'll keep the charts nice and clear. Now, quick analysis. We're coming up to the open, minute to go, and so we've got an uptrend here, nice uptrend this morning. Keep your eye on my mouse arrow here. This is the 5-minute chart. This is the 1-minute chart. I've only got one screen that I'm concentrating on with 2 charts on it this morning. Okay, so you can see that the market is pulling back down, and look where the averages are. The blue is the 8 and the red is the 20 on the 5-minute and on the 1-minute. And so on the 5-minute, the master time frame chart, I'm likely to take trades from this because it's going to move quickly this morning. It's going to move very quickly, and I'm looking for the 8 is providing support here. The 8 is providing support on the master time frame, and we're going to open in a minute. Here we go. And so I'm going to wait for this to just turn green. If it turns green, then I'm in. Look at what's happening here. It's moving very, very quickly. Very, very quickly. And it's already been down once. It's been down again. And it's going to reject, I think. In. Now. Good. Right, so let's see what happens. Hopefully the shorter term time frames support, the EMAs here won't act as resistance. Shouldn't do, because the master time frame, this is the control time frame, it should take it through. Because some tails at the bottom here. This is rejection 1, rejection 2, bigger rejection, and it should go up. Support here and again, and it should now bounce upwards. Now look, it's bounced from the 13,000 round number level. That's a good sign, and that's another entry there. It came down price and it's now started going up. It went up, came down, just exactly what I was demonstrating in the tutorial just before, and we're going up now. The risk for this one is here, and that's a good take profit level there. Take profit there. So that's a good little trade there. Might continue up, but we've had a nice spike, and I'd expect it to come down. Now it depends. Oh, here we go. Now it depends what happens next as to whether I take another trade. Will it hold? Will it hold? Let's have a look. We're down to the EMA here now, looking good and going long. There we go, nice long. So there we go, second trade, and hopefully it makes the same level. We'll have to wait and see. Risk down here, entry here, and we're on the way up. So, you know, we've got 10 points at the moment, could take profits here, but Might wait a little bit longer. Might wait a little bit longer. One successful trade. I'm tempted to take my profits. And so we've got the open at here and the open and the close here and the open here as support. We've also got both the 8 and the 20 EMAs and taking profits now. Good. Okay, so made a new high. It's making higher highs all the way up. This is a big spike and I'd expect it to be back down at the EMAs shortly. We'll have to wait and see what happens. All the way through this area here you can see the market moving up, bouncing down, bounce, up. Didn't touch the EMA, but that was a good trading opportunity. This is all pre-market. The market is open now and the market is coming down, so we have to wait for the next trade. We'd expect these lines, these blue red lines, to hold now. We'd expect them to hold at the next time the market goes down to them, and based on that I'll be looking to go long again at this level here. Okay, so we're just gonna have to wait and see what happens. Okay, this is now quite a long way from the moving averages. Tempted to go long. You can see 13,040, 13,050 is further up, and that would be now. You can see the EMA is within sight. It's at a fairly good level here. Just need it to come down maybe to this level here and then I'll be going long. It's bouncing, and it's going up. Okay. Watching my emotions at this stage. What are my emotions doing? My emotions, excitement, and I've had 2 winning trades. Good there. So now long again and long again. Okay, so we'll wait and see. I expect at some stage 13,050 will be reached, round number level, and we shall see whether it bounces again. Okay, coming up. There, that's a take profit there. Thank you very much. Good. 13,050, just made it. Super. Okay, what's going to happen now? What's going to happen next? Is it going to come back down to the averages? If it does, I'll be looking for the average to hold and I'll be going long again. So all long, I'm not going short. In order to go short, I would need to see the price come down below the average, go up and bounce down again. And that's not going to happen for the next few minutes, so we'll wait and see what happens next. Okay, so that is a big spike, and that is a spike, so you could say that that is a short from there, and it will be for some people who are shorting, but they'll only short down to the averages and then they'll take the profits down there. You can see that that is smaller than that, and therefore that would have been a viable trade. But that's not what I'm doing. I'm not trading that type of trade. I'm going long, and that's a long. Okay, so there's a long, and there's the risk. So I'd expect to get this type of action now, going up. Wait and see. All good, all green candlesticks here. And what are we going to get? Let's wait and see. Okay. You can see the market reacting to the EMA, and that looks good now. Okay. So may take another trade here long. Already in one. If it comes down here now, it's all looking good. These are all opportunities for longs if you're not already in, and the market's turning out green bar after green bar at the moment, and it's keeping in touch with the exponential moving average. Here we go. Here we go. Okay. And so just waiting, just waiting. Just waiting. Just waiting. Coming up to the 50 level, and there. Take profits. Thank you. Super. Super stuff. Really, really good. I'm not going to gamble on it going above the 50 level. Probably will at some point in time, but that's a good round number level to take profits. We're looking at each one of these trades so far has been minimal risk. Maximum was 10, just under 10 points for that one, 7, 8 points with a 12-point gain, which is great. That's what you got to be looking for. That sort of proportion, that sort of ratio over 1-to-1 reward to your risk. And tempted to go long again now. Tempted to go long again. This is a slightly lower low. Obviously reacting to this level. Might see it punch through, but we shall see. At the moment the support, the resistance level is holding. And we'll see. Waiting for it to come down far enough to look like it's worth going long, and here we go now. There, long. Tiny spike at the bottom, and we're long. Okay. There. Right, now, not far away from my stop at this level, but the average looks like it's holding now. So it's going to come down, give it a bit of room, and there we go. There, take profits. Thank you. And here we go now. There, long. Just need to get it through the 8 and off. There, through. Will it hold above it and close above it? Let's wait and see. Nice. Nice. So is it just going to power up on the open of the next bar, or come back like this? Okay, this is okay because it's holding. It's holding above here. It's holding above. Now, okay, so the bounce. Let's get the bounce now. We need it to bounce up. Bouncing off the moving averages. Each one of these bars is about 10 points long, something like that, which is a valid trade if you get it at the bottom and out at the top. Long there, long here, right, okay. Holding, it's holding on the 20 EMA. It's being used as value, and now we're back into profit. 2 trades. 20 EMA still holding, messing about in between the EMAs at the moment. Doesn't know whether to go up or to go down, but based on this, it's going to go up. If you're not long, that's a long there. If you are long, like me, then we'd like to see it going up here somewhere. And take profits. Okay, that's a good sign. Right, now what are you going to do? What are you going to do, market? You're looking good. You've rejected the moving average. And are we going to get some momentum higher here? 20 minutes into the session now. And so we've still got momentum in the long direction. I'd like to see it retest 50. Possible. Here we go. Here we go. Okay, I'm taking profits there. And that's it, because we've now got a high, a lower high, and this could well start coming down now. If this then pokes through this level here and starts consolidating under these levels here, then you've got short positions possible. This still looks good for a long, but you've got a high, comes down, makes a lower high. And so that's the end of the session. I really hope that you found all of that useful. And so if you want to learn how to trade like that, if you want to take advantage of the anomalies in the market, the things that happen on a regular basis that tell you and give you clues as to what the market is going to do next, then get in touch with me. I've got trading courses and I do coaching as well. So my name's Anthony Beardsell. Do get in touch, do leave a comment, let me know, and do subscribe to the channel. And I really do wish you a fantastic week ahead, and I'll catch you on the next video. Bye for now.